for blockchain-related projects. So if you're working on something in blockchain or you would like to, there is co-working available here for a very, very reasonable rate. Come speak to us afterwards if you're interested in that. We are also sponsored by Halcyon Knights. Halcyon Knights are an IT recruitment firm. If you're looking for a job in the blockchain space or you are looking for someone to do a job in the blockchain space, jump onto the Halcyon Knights website. Their banner's just up the back there, and you can get in touch with those guys. I think Ryan's here as well somewhere.
Right here.
Well, right there, right in front of you. Great. And just real quick, one other thing. Andrew Bragg has been in and out all day talking to people about tax in that room, with tax in regards to crypto trading and some of the implications of that. Please raise your hand if you'd be interested in a one-off 20-minute session regarding your crypto tax. Okay, yeah.
That's a resounding yes.
It is a resounding yes. We will not be covering tax this week like we tried to last week. It's a bit touchy. But yeah, when Andrew comes up, we'll announce that on the meetup page and you'll be able to find it. And it should happen on one of these Wednesdays as well.
So we might do it on a different night actually.
Okay.
It should be its own special event because we don't want to disrupt these awesome.
In any case, stick close to the Blockchain Centre meetup page. You'll find it there. That is, believe it or not, this is full blast. This is not within 5 minutes, I'm afraid. Maybe a few weeks. In any case. This is going to be a recorded audio event that may be published on the internet. Just be aware of that. If you speak, you may be heard. But we're just trying to keep it an interesting discussion that other people around the world might like to listen to. And eventually you'll be able to find these on our SoundCloud page, which you can find by going to blockchaincentre.com.au, which is the hub for everything to do with the Blockchain Centre. And I think that's about it.
And our social pages.
And our social pages, of course, which you can find through the website, I hope, Tyrone.
Absolutely.
Excellent. All right, great. Let's get started. How this normally works is we choose 4 topics that go for 15... Oh, sorry, one other thing I forgot to mention is that we're going to be changing up the format a little bit today. We're going to have a 5-minute section at the very end where 5 people, first come, first served, will get 60 seconds time to pitch an idea. And then we'll go from there. So if you're interested in that at the end, keep that in mind, and we'll come up at the end and time you can do a pitch in front of the audience to test out ideas or tell people about something you're working on, anything like that. Have a bit of fun. So how this normally works is we grab 4 topics, we time limit them to 15 minutes each, and then sometimes we cut it shorter than that, and we usually start with a question from someone who's new to the meetup. So who is new to the meetup and or the Blockchain Centre? Surely there's more than that. I don't recognise most of these faces in the room. If so, that's really low. Normally you have like 30-40% of people new to the meetup. Who's here is relatively new to crypto, like first month, let's say? First month in crypto? Wow, it's so interesting. When the market tanks, it's all the old crowd. That's awesome. Okay, good. We can have some fun tonight. So let's start off with some topics from someone who's new to the meetup. A topic can be anything really, but keep it nice and broad so we can discuss it at length.
Mining.
What about mining? And you're not new. You were here last week.
Someone else. First meetup. Relatively new.
Well, okay, we'll keep that in mind. Yep. Proof of work versus proof of stake, and we can talk about other proofing techniques as well. Do we think that's a good topic to discuss? Yeah. Okay. What's the word for that? Is it like proofing mechanism?
Consensus mechanism.
Consensus mechanism. Thank you, Bob.
Consensus algorithms.
Okay, now let's choose some other topics. How about BitConnect? Yeah. I already have that up there, actually. Who's seen the video? The video of the conference? If you haven't seen a video of the conference, there's this guy, he's like some Latino guy, he jumps up on this BitConnect stage and he just like yells, BitConnect! Like twice in like the space of a minute. It's hilarious. You gotta look it up. Just look up BitConnect conference. Yeah, it's great. It's awesome. Anyway, they died. We'll talk about that.
Yay!
Yeah, well, let's definitely discuss the market drop and, by extension, BitConnect. They're tied events. The dip. We will call it the dip. Okay, more topics.
I want to hear about Lightning Network and what people think that's going to do to Bitcoin.
Who here is in a position to discuss the Lightning Network at some length? Please raise your hand. 2 people. Who wants to talk about it? Who wants to know more about it? Yeah, that was pretty lackluster. We might leave that.
There might be someone who might be able to talk about the Lightning Network in the future, though.
Yes, that's true, Martin. He's referring to me. I know a bit about it, but I don't like just talking. Oh, you?
Jonas Schnelly, maybe?
Oh, yeah, true. Jonas Schnelly.
Jonas Schnelly.
He won't be able to talk about Lightning, though, because he doesn't work on it. We have a Bitcoin core developer coming to the Blockchain Centre in the near future. I think it's on the 10th of February.
11th, Saturday.
11th of February on a Saturday. He's done a fair few talks around, but he's actually one of the core developers of Bitcoin. So if you're interested in hearing that, you can jump on the Blockchain Centre Eventbrite page. Anyway, back to topics.
I know somebody asked about hash graphs last week. Just wondering if anybody knows a little bit more about it this week.
Hash graph, is that... does anyone have anything else to say about that? Like, we didn't know it last week. Do we know this week?
You can put it in consensus systems. It's like just a different method of consensus.
Yeah, we can talk about it in the first topic, I guess. A little bit. We can touch on it. I don't really know that much about it, though. Yep.
Strategies for getting your AUD into overseas exchanges.
We did arbitrage last week, which is basically that. So I don't think we'll touch on that one again. Sorry, mate. Yep.
Just the whole ERC20 conversion into the actual token or whatever.
So what do you mean by that? Like having a transitionary token, so you start with an ERC20 token and then coins have... Okay. Is that something that would interest people to talk about transitionary tokens?
Yeah. What do you mean? Is that like swapping between
That's like doing a raise as an ERC20 token and then running an actual blockchain and converting everything onto that. Is that interesting to people?
Is that the same as when you're kind of trying an ICO and then
It's not the same?
We're talking about the later stage. It's more of a structural thing. Anyway, it probably won't cover that one. It's not, people don't seem that interested. Yep.
How about investing in ICOs? Like, I haven't done it before, so maybe a discussion about the feedback or
Okay.
what people have done.
There is a upcoming masterclass with the Blockchain Centre about ICOs, but we can talk about it today if people are interested. Please raise your hand if you want to talk about how to invest in ICOs and what to look out for.
Yay!
Yay.
Masterclass.
It's funny, the day that cryptocurrency takes one of its biggest dips ever, people want to still have a go at ICOs. Anyway, let's roll with one more topic.
Here.
Yep.
Except the Bitcoin and coins, what other applications that blockchain can be used for?
Okay, I think we actually did talk about that quite a bit last week. We tried to talk about use cases for blockchain outside of a means of exchange, so we'll probably leave that one this week.
I didn't participate last time.
Yeah, I know. It's just because a lot of the people that come to these things come again and again and again, and especially for me, it gets quite tiresome to repeat topics every week. But we'll come back to it at some point. Yep.
Like, following on from the dip discussion, we talked about how you can zero in on the best buys during a bloodbath.
Yeah. Does anyone have any good strategies that they might be able to share as a part of that topic regarding getting in at the dip and making the most of the bloodbath, as you termed it? Is that a topic that interests people?
Yes.
Okay, we'll write bloodbath. Okay, let's get started. Hold on, what's the time? 6:17. Give this one till 6:30. So let's talk about consensus mechanisms. Who would be good to start us off on this one? Pete? Do you want to start us off on consensus mechanisms? Come up here, bro. Sorry, I just don't like talking about everyone. So and these mics are recording me and whoever else is up here, but not really anyone else. So we've got to try and get other people on the mic sometimes.
So the main two are proof of work and proof of stake. So the main two are proof of work and proof of stake. Proof of work is where miners do work to confirm that the transactions in the block are actually legit. and then proof of stake is where you hold a certain amount of money in a wallet, and then miners will do a little bit of work with that, and let the stake is approved. Basically, it's a way to say that it's hard to do this like amount of work to put transactions in a block. So either it's hard by the computation that's required, or it's hard because you would need to have so much currency that you're financially disincentivized to like kind of fuck with the system. Like if you have so much money in a system, you're more likely to be an honest participant because your money is at stake. That's the idea with proof of stake. But there's some really out there like systems that NEM has proof of importance, which is like how much you kind of interact with the blockchain. There's proof of space, which looks at like your hard drive space, and if you're able to store a certain amount of information. Basically, yeah, it's just a system to make things hard to update the ledger, and there's different ways of doing that. Hashgraph has this system of like nodes where like things check back. Tangle is another one. Like they're all different systems of like consensus for the network. But yeah, the main ones are proof of work and proof of stake.
What are some of the big problems with proof of work?
So proof of work is pretty like electricity intensive, so it's not very good for the environment. So the Bitcoin system, in terms of proof of work, probably uses the amount of electricity the small country would like use up in doing transactions. So yeah, it's not that efficient. Proof of stake tends to be more efficient, but somewhat more open to attack. Like you can see people like countries with large amounts of wealth like come in and capture a lot of the market, and if they have 51% of the coin supply, then they can essentially start running their own nodes and decide what the consensus is on the network. But yeah, they're all preventative in their own ways. Like the idea behind proof of stake is that if a country comes in with lots of money and there's a limited supply, when they start buying, the price of the coin will go up so much because it's a market, right? And the price will go up so much that they can't buy 51% of the supply. That's the idea, at least.
And what would you say the most effective proof of work system out there is, and why? What's the most effective implementation of it?
Okay, so like there's some proof of work systems which are ASIC resistant. So if you look at the back over there, those are all Bitcoin miners. They all use chips which are called ASIC chips, which are application integrated circuit chips.
Application specific.
There you go. So basically all they do is mine Bitcoin and only that algorithm. They can't do anything else useful. So people make these machines to mine certain algorithms, and they're just incredibly fast, way faster than what you can do on your normal computer at home. And that kind of, some people say was the idea of Satoshi's white paper, was that if you have one CPU, you have one vote on the network about what the consensus should be. Who knows if that's what he really wanted or not, but these chips allow someone to get like a lot more of the power away from like the normal users and take them into specialized farms. So there's algorithms out here. Sorry, yeah, go ahead.
I was just going to ask if there's I do pooling, I think it is with proof of work. Is there something equivalent in proof of stake where someone can just get enough people?
There is ways of doing pooling proof of stake.
Yeah.
Dash does a combination of proof of work and proof of stake. They don't have to have one together.
That's your exact question about whether or not people can pool their stakes to split a block reward if one of them wins it. That does exist, but not in every system. They're set up in different ways.
But yeah, there's a lot. So back to the point, there's a lot of hashing algorithms like Equihash, which is what Ethereum uses, and CryptoNight, which is what Monero uses, that are ASIC resistant.
Sorry. Ethereum uses Equihash, whereas Equihash is used by Zcash.
Yeah, so a lot of these like systems, like they'll only be mineable on GPUs practically. So like you tend to see users like buying their own hardware, and it's a more equitable type of system.
Because the setup cost is lower.
Yeah.
And it's harder to run entire farms of GPU miners because they're very fragile in reality.
Stuff like with Ethereum, the amount of memory needed to actually process it is large, so it's not cost effective to have ASICs. Like the ASICs here have very little memory to create a chip with memory is much. So that's what happens with most graphics cards with Ethereum. You only can't do the 2 gig one because it's just too big.
So we've spoken about egalitarian implementations of proof of work. Is there an equivalent sort of problem that can arise in proof of staking systems?
Yeah, so I mean, essentially, like in a lot of these coins that have pre-mines, which is like a certain amount of the supply is mined and sold to like private corporations or the early investors, they can hold a lot of the currency, which gives them more rights to vote over the consensus of what the network is. So you will see like coins that have a large insta-mine or pre-mine, where one holder is essentially controlling, or could be controlling theoretically, like the consensus on the system, just because they hold so many of the coins early on. And the other thing is, like say with Dash right now, if I wanted to be involved in the proof of stake system, that would cost me probably $700,000 to start running one of these staking nodes.
And that's just to buy the required amount.
Yeah, exactly. So like you don't lose that money, but it's a huge investment that most people just cannot undertake.
A couple of years ago it was 10,000.
Yeah.
It's over $1 million now.
Yeah.
I was talking about the price today, right?
Okay, cool.
I was asked about the electricity thing. The company Envian just got $100 million in their ICO,
right?
Because they've designed these truly sustainable mines and doing, they were going only to sustainable, the electricity and the wind and all that. So they're fully sustainable mines. Do you think this will turn over or handle this problem of the electricity? Do you know anything about it?
I haven't heard of that.
I haven't heard of it either. Sounds like a scam to me.
Well, they did a container-based mining system that simply to position that you could take it anywhere and plug it into a renewable source. It doesn't mean that you will plug it in.
The sustainable solution is to not use proof of work. That's the solution.
The thing too is cost of power is relative. Like a lot of places in China where there's a lot of population growth, they're building power plants for these populations. So there's excess power there, so people in China can get power very cheap.
Yeah.
And they want the power retailers to want to sell it to them. They've got this big power plant. They get miners to use it, they don't care. It's 5 or 10 years before they can actually use the full capacity. Yes and no.
Yeah, China says they're getting rid of something every day.
Yeah, China says they're getting rid of mining, but then if you look at the graph of the hash rate, it just keeps going up. It doesn't stop. They're not turning off those ASICs. I can promise you that much. No.
With proof of stake, obviously the state helps to validate the network and keep it secure. But how do the actual blocks how does the work get done? How do you validate the blocks?
So I'm not aware of any system that's 100% proof of stake. So usually you'll have a miner that creates the block, and then that'll be given to the stakers to confirm that it's.
So they still use proof of work mining?
Yeah, most of them. Or if it's 100% proof of stake, they'll make it really easy for the stakers to mine, so that they can just mine it on their CPU or like a very low.
So your wallet, your node, like your wallet does mining.
Yeah, exactly. That's at least my understanding.
Yeah.
Someone might be able to.
The work required to secure a blockchain doesn't need that much power, doesn't need to be that complex. The way it's designed is inherently hard to hack anyway. Making it more high hash rate doesn't really make it.
The question is how willing you are to use money. So if it is really, really hard, your money are 100% secure. And if you have your lifetime savings in the future or you have lots of money, I don't think there's any idea to have lots of money of stake coin because things can happen. It's security. More electricity means more security. As simple as that.
Yeah. Security against what though? Because proof of work, having a 51% attack happen to your network, isn't actually as bad as it sounds. A miner can't do a whole lot with a 51% of their network. They can try and double spend, and they can try and break some of the consensus rules, but they have to be really trying to do that, and they have to know what they're looking out for. It's very difficult for a miner to be able to make any significant change to a network. They can't reverse transactions, they can't do anything like that.
That's important to understand because what the sort of a feel is because there's no official sort of marketing thing behind Bitcoin, of course. What's apparent with the outsiders is that 51% attack to some people sounds like that's it, that it's gone, when in fact it's far from the truth.
to do that sort of thing,
You get 51%, then
and you're done. Yeah.
But it doesn't.
Like, just to be clear, if you have a 51% situation, you can't rewrite old blocks. Like, you can't do that. So you can change the history of the blocks that are coming up. So the 49% could fork off and say we're not going to recognize the
51% they have a smaller.
Exactly.
Yep. Proof of stake is also going to help with transaction speed, which is a big problem.
Not necessarily. Proof of stake is just a consensus mechanism for creating blocks, but most often transaction bandwidth is determined by the structure and speed of those blocks as opposed to the consensus mechanism that generates them. So if on Bitcoin you had proof of stake, you're still going to have 10-minute block times with still 1 megabyte blocks, and still most people not using SegWit. So you're still going to have a backlog, and it's still going to suck. Yeah.
So what is the fastest one?
That is up for debate at the moment. It really is. Who knows?
Is there a minimum requirement of nodes in order to have a secure network on proof of stake? And if there is a minimum, is there also a maximum where it kind of starts?
It just depends how many users you have. Like, if you have one user, then you'll probably be fine with like 2 nodes. But someone could attack those 2 nodes and have 51% attack if they even got one. It's more about like the scalability of the system. Like, as you have more users, you need more nodes. Yeah, the more nodes that are running, the more resilient your system is to attack.
Is there an upper limit where it becomes a waste of time adding?
I don't think anyone's gotten there yet, so I guess we wouldn't know.
So is there an upper limit to it being a waste of time to run a node?
Yes and no, you can still stake. But what I mean is there an upper limit where your security kind of stops becoming more secure?
Well,
exponentially. It's not going to be exponential.
Is this an proof of stake system?
Yeah.
Then absolutely, because if you think about it, if there's a certain staking requirement and there's only a finite amount of tokens available on that system, there can only be so many nodes that can possibly run. The closer to 100% of the supply being locked up in staking makes it more and more secure. But you're right, there are what's the word?
Hard and soft caps.
There's hard and soft caps, but there's also a rule of diminishing returns. Like the difference between it being 98% staked and 99% staked is really not that much of a difference security-wise, because most of it's locked up and no one can really change hands if there's that limited liquidity. But so
it's also like mining. Like the way proof of stake works in Dash is they get a percentage of the block reward. If there's more people in proof of stake, that percentage gets split across more nodes, the reward becomes less. So at a point, it's not worth you just holding your money in there because you're not getting much reward out of it. There's less people in it, there's more reward for each node. So there's a balance there too.
yeah. Okay, that's it for consensus mechanisms. We're at 6:30 now. Thanks, Pete.
Thanks.
Now let's talk about the big news of the day, the big dip. Between 20 to 40% down on 24-hour charts for basically everything. Kind of scary to a lot of newcomers to the space, which is why a lot of them probably aren't here tonight. But for those of us that have been around for quite a while, this is not the first time this has happened. In fact, a very similar thing happened just before Christmas, so it's not unusual for this sort of massive correction to occur. That being said, it has triggered off a whole lot of different activities, including the death of BitConnect, which I'm very happy about.
Why are you happy about it?
Why am I happy about it? Well, because it's basically a Ponzi scheme, and their underlying value got devalued to the point that they could no longer operate, and they see you later. And it's now dead.
Do you think that the BitConnect exit was happening as part of the dip, as in they created a dip by cashing in?
Possible, very, very possible. It wouldn't surprise me.
You had a cease and desist order for BitConnect Mexico, and it still kept going up. People still buying.
If you get a cease and desist and it's still going up, it's a great time to exit, right? Yeah.
Because obviously people don't know when you get a cease and desist from a president government. Well, you can argue that.
They knew they were going to be out screwed some way, whether it's
So whether or not they're jumping off bridges or enjoying a nice cocktail on in the Bahamas is something I guess we'll find out in the coming days.
The owners are fine. The owners are. It's all people. They're fine.
Yeah.
On Reddit, there's what they call a digital tombstone of people that got raped and ritually. Okay, I've got a bit of a. I don't know the stick reading it. It's not nice.
No.
Top post on Reddit's moments is also hotline.
Wow.
From cryptocurrency.
Anybody's in US high-tech, maybe it's less.
Yes, thank you. Thank you.
Canadian US high-tech, the American US high-tech, and now big tech. So the amount of clients we have that invest in it blows my mind. And maybe it's a lesson to seriously think of exiting if you're in US high-tech.
Yeah.
Or any other Ponzi-like scheme.
They probably are. America and Canada have already shut down, and we still have people falling into every day on them.
I've got one of my cousins living in Dubai, works for Emirates, and he actually went to the address, and there was a little pink bike sitting outside the front door, and a sign saying, "Don't ring the doorbell, there's a baby sleeping," outside the actual address. And it was just in one of the buildings that was in the middle of the desert. It's just like, it's residential. So I know people have their offices there for tax purposes, but you know, when you do a bit of intel and research into the company, it just, you know, this thing starts to add up.
Maybe he's probably the managing director.
I think
Yeah.
there's
There's actually a good chat about that.
billion. I think that 2.7 billion. So you can count companies in Melbourne that are worth that are, you know, can have 100,000 people depending on them for essential things.
It's extraordinary that it constantly says don't put in what you can't lose, and yet people are still.
Yeah, people, especially the new entrants.
Yes.
Yeah.
There's so much saying don't do it, don't do it.
Yeah.
And no one listens. No one listens. They get the crypto fever and then they just run with it and they dump whatever they can.
But in all fairness, I mean, the same people have been saying don't invest in Bitcoin, period, because of X, Y, and Z. They're always going to be the naysayers, and they're always going to be the people that are gun ho.
I don't know anybody who hasn't invested in Bitcoin for a long period of time. Whenever someone asks them, don't put in more than $200. I don't know anybody who doesn't say that. And anybody who does say that is not someone who's invested in cryptocurrency.
My junk box is full of emails and making videos on Bitcoin. And if you read some of the Telegram posts, some of the ICOs, I mean, it's clear people don't even read the white paper or anything on this. It's shocking.
Yeah. It's moments like these that sort of shake out that behaviour for a little while.
Yeah.
Although the last time we had this sort of shakeout, then Ripple happened, and then yeah. So it's trying to find that balance, which especially for the newer entrants, it's like super skeptical. No, there is actually some serious technology behind it, but no, you're not going to make money if you just throw your money at anything. You actually have to do your digging and spend time on it, which people actually don't want to do, which shouldn't surprise any of us really, but it's just the reality of life. And it's moments like this where we see a bloodbath that it cuts those sort of people out, and now they're thinking, oh shit, I'm actually 30% down on my initial investment, and they'll be trying to get out tomorrow. They'll be queuing up out the non-existent doors, but they'll be on the exchanges trying to pull out tomorrow, regardless of what happens, because they're too scared, they're too nervous. Making a lot of money very quickly is one thing, but losing it even a little bit is enough to get early investors, young investors out of the market as well.
You know what as well? If those people enter just purely for the money and they go rich really quickly, that it's going to take 10 times as long to get those people back to trust everything else that this
That's right.
Decentralization of everything, insurance money, whatever you want to do.
It'll change for the big
They now
institutions.
see it as a scam. It's unfortunate, but
Does anyone want to talk about price action in particular? As in, what are the more interesting things that have happened during this dip? Obviously, everything's gone down, but why everything? Okay, 30 seconds. Go, give us an explanation.
Bitcoin is the king, whether people like it or not. So whenever Bitcoin goes down, everything else goes down. Generally speaking, that's the case, especially when we have a big correction like this one. And this one is not a big correction, that's the truth. Every 3 to 4 months, a correction like this, 40-50% down happens.
He's saying why is it different to that? Because this time the entire market went down.
Every single time the entire market goes down.
Yeah.
Yep.
If it didn't though, if it was just Bitcoin, that's, I think all of the altcoin holders would throw them all at Bitcoin. I feel like if they didn't go down with it, we would end up seeing the volume of transactions in Bitcoin.
Mate, I've only been in it for 4 to 6 weeks, but I agree. I've seen Bitcoin drop and altcoins boom.
Yeah.
Exactly.
Like December 23rd, I saw Bitcoin drop down to 15.5 and all the altcoins followed. Best time for me to buy, I presumed, and the same thing happened this time. I was just, if that's where you were getting at, like why
there's two sort of things that happen when Bitcoin dips hard, right? And all we have to do is look at the rest of the market. It's quite simple, really. If everything else is going down, that means people are actually exiting the market.
Yeah.
They're taking their money out of their alts, they're buying Bitcoin with it, which is why all the alts are going down relative to Bitcoin, and then Bitcoin is also going down, meaning that they are leaving it for fiat. So what we're seeing right now is a big exit event. Other times you'll see Bitcoin drop and say, Ripple pump the fuck up, because that's what's happening. People are taking their money out of Bitcoin and putting it into other cryptocurrencies. So this, we can see, is actually money leaving the crypto space today, as opposed to a rebalance.
And
Christmas shopping.
guys, it's different to go down. It's different to go down just 10% and another coin go up. This is not a correction. It's not a proper crash like this one. This one are proper crashes. They're happening every 3 months, approximately speaking. You can go to charts and see weekly charts or daily charts, and you can go back and see how every some months, how every period of time, the market cycles are there and the Bitcoin drops. Personally, I posted on my trading view the idea 5-6 days ago that Bitcoin is going to drop these days. It's on my trading view, I'm not lying, you can validate it for yourselves. So, in my opinion, it's time to pump again. Probably the bottom is just above 10,000. If you see it going below 10,000, it's going to probably touch 8.5 and then pump again.
US or Australian? That's not
US.
US.
Always been getting too technical. How do you identify that price sensitivity area?
Yes. Lots of time, my friend.
Okay.
You'd be able to
time.
use it like this guy.
You can,
yeah. Let's move on now to
you can find me later if you want. I can.
Can I just mention, just in regards to why all the coins, not just Bitcoin, are coming down? I mean, I think one clear thing that's been happening in the last few months is the regulations haven't been happening once, like on a minor level. They've been happening more consistently now. It's affecting many different countries. And I think over the last few weeks, the fact that there are so many regulations that have been applied in all these different countries, I think a lot of people are having reservations about whether or not Bitcoin, cryptocurrencies are a good idea. So I would have thought, if anything, that was one of the major factors as to what's causing the crash.
Oh, sure. Especially in the last couple of days, like there's been a series of updates regarding regulation or rumours thereof, and that's already been priced in, though. I would say the idea that cryptos are going to be banned in Korea, they've already been banned in China, sort of, and then now Japan's talking about it as well. That's already priced into the market. People are already expecting that those bans will come about as far as their price behaviour goes. So if they really do think it's going to get banned, sorry?
Even with the ban in China, just talking to the Chinese networks on there, it's not stopping the trade.
No, not at all. They're just going through Korea.
Yeah, but the rest of the market.
But they're going through Japan. So what they're doing is they're doing their launches really out of Hong Kong and Japan, where the rules are different.
Yeah.
Still based in China. They just get around it. Like they say, I don't worry, they just get around it.
We need regulation.
Rules are enough to move the market.
Oh, yeah.
So people outside of China will react more to Chinese news than people in China.
Yeah.
What about the Bitcoin futures settlements that are coming up before we head out?
I have heard a couple of people mention that. Do you want to talk about that briefly?
I have my mate tell me that in 48 hours that's going to happen. We'll either dump out the 48 story or not. Like, he's joking, but
yeah,
like it was kind of that was the conversation. It was either it's going to go up or it's going to crash.
So one of the new futures markets that's come online it's either CME or CBOE. I probably think it's CME though. That futures contract is about to expire in 2 days, meaning that all of the shorts will have to be closed because that's how futures contracts work. meaning that the book will be cleared and a new futures contract will start up. And people are speculating that that will bring about a new paradigm of the futures market. So because you're starting with a fresh book and there's not all these shorts just sitting there, they actually might start having a long market and having a premium on the price. But again, it just depends entirely on the people that are trading on that system. And I think it's debatable whether or not that system is actually playing into the price too much. And I'm just basing that purely on the fact that I don't know what the CME futures price is. That's not information that's fed to me as a regular crypto trader, so I'm not sure that anyone else is taking that into account either.
The only thing I heard about that is that there's very little volume on there compared to the actual market.
Yeah, I read somewhere that BitMEX, the actual derivatives futures trading platform that actual Bitcoin traders use, has something like 4 times the volume of the CME futures contract. So it gives you an idea of really how much these guys are playing into it. It's really been quite lackluster. Yep, one more.
So this keeps seems to have happened at the same point for the last 3 years.
Yeah.
There's some market factor I'm not understanding. It's like within a week, same time last year.
I've heard it has to do with the Chinese New Year. A lot of people are cashing out just to buy presents. I don't know
I guess we'll find out in the coming days. News organisations will decide what all this means, whether or not that is true, and then that will be the story. But anyway, let's move on now to the next topic, which is ICOs. That might be our last topic for today. What to look out for in a new ICOs and how to do it. Who's got an actually good ICO that they want to tell their story about that has closed up in the last few months? Anyone investing in ICOs that's treated them well?
You don't like the embryo.
Sorry?
I could tell you about embryo, but you don't like it.
I've never heard of it. If I haven't heard of it, I don't like it.
embryo went really well.
I don't look at ICOs, so how do I?
I can tell you about a good one that was executed really badly last time.
Sure, do you want to come and talk about it? All right.
Don't have the screen up. Sorry? Don't have the screen.
No, I don't have the
Hi everyone. So me and a bunch of friends from work, we started a little chat, and we're looking at ICOs. We're all software product managers and analysts. So we thought we're going to sort of try and analyze these ICOs. So the first thing that happened is we saw about 100 of them, and trying to figure out which are good and which are bad is becoming a really big job. Yeah? So we wanted to analyze it based on some things we found, like online. Of course, you got to look at the team, got to look at what they're actually building, if it's a real use case, who's building it, what for, do they actually have a real thing to build or not, is it just a scam or whatever. So it becomes really, really hard to, because of all the noise. So we heard about Charlie Shrem being an advisor to InsurePal, and Charlie Shrem was one of the guys who ended up in jail early. He was part of the Bitcoin early sort of adopters in New York. Like, I don't know a lot about him, but I saw some of his work and I liked it. So we started analyzing it and we really loved it. So the team is Slovenian based, which is like a big Central European hub for blockchain in general, which was good. There's a team from US, I believe, and UK as well, all insurance experts from the industry. That was good as well. We looked at the model, the business model, and the actual product. So they would automatically calculate the insurance premiums based on votes from your peers. So that was good as well. The business model was okay. So everything about it was good. And then as we were approaching the actual ICO, we looked at the Telegram group and we saw that it's getting a little bit more noisy. So there's more and more people asking when Lambo, when Moon, when. So it's like you're scrolling and you're getting, please make sure you send it to this Ether address, and then someone responds out, scam, or who's a scam, who's not a scam. People were creating fake Telegram profiles with the name of the Slovenian support admin dude, saying that make sure you follow these steps, links up the real website, but then repeats the steps with their own Ether address. And it takes like 3 hours for someone to pick it up. So anyway, we were online last night at about midnight, and we were like, okay, so we're going to start soon. We got a live feed on Facebook. We went in, and we're like, okay, So what about the gas? This was the funniest bit. So we're not blockchain experts, but we understood that you needed to sort of stake some more gas if you want to actually get it done quickly. No one from InsurePal actually mentioned anything about it's going to sell out in a minute or like 2 minutes, even though we sort of anticipate that, but you know. And no one said anything about the gas. They said gas limit 25,000, and which of course is not going to work. And we're like, okay, so we're going to try 50 and increase the GUI. And then we're like, this is like Monty Python, we're on the phone. It's never going to work. So anyway, the website crashed a minute before the ICO. So everyone who was trying to get the Ether address couldn't. Then the website was hacked as well because you were seeing a different Ether address to me. And I had the website up for like 30 minutes before because I was doing something else. So all in all, I had a little bit of an investment going through. I said 50,000 gas, increased the GUI as well. Yeah, failed. Did it again, failed. And then we're on the phone, so what we're going to do? Sold out. And that's it. So the whole thing sold out. So it turns out that the whole thing was sold out to a small amount of people. And what they actually are creating is a decentralized insurance product that you're going to have a lot of people investing a little bit of money. So the ICO is the complete opposite of what they stand for and what they actually built. Okay, so now everyone's, people have lost money, sent it to the wrong Ether address, didn't get a chance to invest and so on. So basically that's what's happening with ICOs. So if I'm going to just go back to the Power Ledger ICO, it was a much better sort of experience. You have time to do due diligence, ask questions, you get the answers, you can research a little bit, and you had a period of a few days to invest. So they had like an individual limit, a lot of education, and so on. So that's one of the things to watch out for. If closer to the event, it becomes sort of more and more messy, I think there's a bit of a scam happening. So I don't know if this is a scam or not, but I know that if they want to do decentralized insurance to help people to remove the centralization, to have cheap insurance that actually works and makes sense, that's the actual business model. You can't sell out to a few people because, yeah, anyway, that's it.
That's good.
Like, as a sort of an analyst, I work in the space. If I get like a document, a 25-page document to read, if you start reading it and highlighting, it's literally hours and hours of work. Yeah? So with ICOs, it's like literally, where can I find knowledge who's rating and who's not rating? There's a Zilla app now that's going to do the rating for you. It's like a marketplace, you can buy them with a credit card. God knows where this is going to go.
There's like 5 or 6 different ICO review sites, all of which are being paid to review those ICOs, by the way.
I did my own due diligence on it.
Yep.
Sorry.
And so Swiss Borg is it? What do you reckon?
Well, it was. I'm not getting up now.
Yep.
Can I ask why you don't go into ICOs?
It's just a shit test. It's a lot of effort for not much gain. And you have to wait months to actually get the actual token that you can then trade. And by that time, I would forget about it. It doesn't suit me. It doesn't suit my trading style. And plus, I very, very rarely see an ICO that interests me, that I think is actually novel and does actually have something useful to give to the cryptocurrency community. I see a lot of ICOs that are centered around a single business and a single business's ability to deliver a certain product. So a lot of them will be like, say it's like a gaming focused coin. Everything will be tied around their gaming platform, and you know that sort of thing is interesting when you consider what blockchain technology can bring to those businesses. But that doesn't really interest me as far as distributed technologies go, which is why I'm into blockchain technology in the first place, because I'm interested in structures that are not centralized, as opposed to businesses running token sales to effectively sell assets that they are able to create because of blockchain technology, but don't actually do anything particularly special themselves.
What about Ether?
Well, Ether provides a fantastic technology. It allows you to run that sort of thing. And it has done very interesting things it's promised a lot more than it's actually been used for. That doesn't mean it can't be used for other things, but smart contracts are a great way to create tokens that do nothing except transact. And that's a 100% a use case. So Ethereum doesn't fall into that box for me, but a lot of these ERC tokens that are being created, the vast majority of them are tied to some sort of central business. And that just doesn't interest me. It's not why I got into the space. It's not what I want to do. It's not what I want to see happen to the crypto space. I really think that the origins of Bitcoin come from a place of trying to undermine existing systems rather than amplify the existing ones, which is what a lot of these ICOs are doing. They're taking a lot of money to do big business, essentially, and using some of the technology. Fine by me, but not what I'm interested in.
So how do you think, so if we speak about ICO and tokens, etc., what do you view in, say, 2018 perspective for tokens? Will they be viewed as a commodity or will they be viewed as security?
I'm not a regulator. The regulators are going to decide what they're going to decide.
Of course not, but I'm just reading your personal opinion. I'm not going to take
I'm saying that I don't really care. I don't really care what I think it is because it's irrelevant.
But it's a discussion within the space.
We can discuss it all we like, but ASIC at the end of the day is going to decide what they're going to decide, and what we say has got nothing to do with that ruling. It's unfortunate, but it's true. There's no point thinking about it.
But just on a sort of along the same lines but different, surely the money coming into the space like this is facilitating young startups and people that would never get access to money to actually do things. Isn't
Sure.
that the whole point of it?
No, I wouldn't say that's the point of it.
But I mean,
There isn't a...
is effectively a fundraising activity to make it possible for them to develop the technology and the idea. So, I mean, I just focus on the team of people trying to do something in an AI area. There's no way they can do it alone. The three of them are just about exhausted.
I agree with that, but not what he's into. It's actually agreeing with it's not what he's personally into.
And there's also this thing, like I've worked in the startup space for a number of years, and I feel like in a lot of ways ICOs are just, you know, a new version of the like going and doing fundraising, right? Going to investors, getting money and so on. It's just that, you know, suddenly you make it a coin and instead of getting like $10 million seed funding, you get like $200 million because the hot space is so hot. You know, like I see this as power coins, say, right? And like I don't know much, I don't know the team, but my understanding is they're doing great stuff. But if they were a startup, there's no way I could give them $200 million or, you know, $800 million, whatever the market cap is now. Like they're just too small, right? Like it's going to take them a while to grow. And I think it's great if small businesses are going to use ICOs and use the blockchain to be able to get the seed funding. But at the same time, like the numbers that are going into it, to me at least, are very much like...
The numbers are one thing, but there's also the issue of these businesses, their core focus is not actually developing their business. Like, that's what you go to investors for, to get money so you don't have to think about this sort of stuff. When you go through the business of running an ICO, that becomes your business for that length of time.
Yeah.
And it doesn't actually prove that you're capable of delivering what you say you are going to do.
Exactly. And if a lot of these businesses have nothing to do with the blockchain in the first place, then really the right way to think about it, as far as I'm concerned, is to think about it as investing in that business, which is fine, and it's great that you've got liquidity, you can invest and you can trade your share of that business on the markets, but you've got to look at the market cap, the value of that business and say, is that business actually worth the market cap of that coin? And I think in a lot of cases, they're crazy overvalued compared to what the business is actually providing.
All right, I think that's a great place to wrap that topic up now. Well, no, it was. It was a great summary. Thank you. All right, so now we're going to do our 5-minute. You get 60 seconds. You can pitch an idea if you like. If you want to come up the front, do we have any takers? So I'm going to time you, by the way. So and if that's it. Once you speak, that's it. 60 seconds. That's all you get. So who's prepared to do that? You'll get up. Awesome. We got 1, 2, 3. Probably fit one more. Just one more. First come, first serve. You've been last week. Come on. Yeah, maybe next week. All right, let's just roll with 3. So, what's your name?
My name's Joseph.
Your name's Joseph. Sorry, let me just get my stopwatch. So this is legit and fair.
This isn't a pitch. This is a dumb idea I came up with this morning, but.
I think I'm getting copies.
Okay, go.
All right. Simple idea. The Lightning Network's going to come to Bitcoin soon. But for the Lightning Network to work, we need a whole bunch of capital in Bitcoin so that people can actually trade back and forth. So I'm imagining making something like NiceHash, which is like a pretty website. People can actually put their Bitcoin in a wallet that's run by a company that then people can connect to, and then suddenly you've got a Bitcoin Lightning Network. And the people who stake their Bitcoin in that company then make a profit out of the portion of trading transaction fees that the network itself can provide. So that gives the whole network lots of liquidity, and it also means that if you hold Bitcoin, you can make an income off that Bitcoin just like if it was a proof of stake system. So anyway, that's like an interesting idea. I can't wait this one. Thank you.
Okay. Next, what's your name?
Simon.
Hey Simon, I'm also Simon. Hey Simon. All right, you ready? Ready, set. Oh shit! It deleted the time.
Anyways, I'd like to thank everyone for coming down. This is actually extremely, it's a good turnout. If we would get this every week.
We have been actually.
But yeah, so I've been associated with this space for a little bit. I don't have my own thing at the moment, but I work for a company called Parcel, and we're creating a supply chain end-to-end solution for the cannabis industry in North America and Canada. And go Parcel. So what we're actually looking for is essentially people who have experience in crypto and blockchain and can create content and essentially speak on behalf of the company. So come up, speak to me, and yeah, let's make something happen. So go marijuana.
Cool. All right, Shannon. Wait, just wait, go.
Alright, sweet. Someone asked earlier about getting Australian dollars into overseas exchanges, and obviously it's quite hard in Australia to put any sort of volume of cash into the market. Most places cap out at about 10 grand. So I just wanted to take the time to tell everyone that my firm basically specialises in allowing people to put large volumes of money into the market, so over 10,000 to 2 million, and then obviously on the way back, when you want to liquidate, it's really hard. So if you want to take any profits, then our firm specialises in trades from 10,000 to 2 million. And really, really quickly, lastly, not relevant to this at all, but you were talking about ICOs. You want to see a really cool concept of the future of how ICOs can be run? Check out the EOS blockchain. Because what they are doing with our ICO platform is absolutely incredible.
Could you say that slower?
EOS. Yeah, if anyone wants to talk about
And that's time.
What's your business name?
It's Caleb and Brown. Karen's now just going to quickly break. Another one.
Is this on?
It is on. No, not today. Come on next week. Come on next week.
Hi, I'm Karen. I'm the operations manager for the Blockchain Centre. Thanks everyone for coming down tonight. The crowd gets bigger and bigger every week. Thank you, Simon. All of you, as you walked in, we are running some fantastic courses. We've got Australia's first blockchain developers course coming up on the 16th of Feb. Please grab a flyer. Martin has asked me just to remind you that it is for using the Solidity language for scripting smart contracts, and those with 1 to 2 years of JavaScript is advised. And tomorrow night, our investing masterclass, which is nearly sold out, so please, if you're coming tomorrow, sign up now, Eventbrite. Next week, blockchain masterclass, so that's selling out quickly, and we've just launched our new Investing in ICO masterclass, and that is Thursday the 1st of Feb. So please grab these flyers, they're around the room. Thanks for coming to the Blockchain Centre.
All right, so there is a bottle shop next door. If you'd like to consume some alcohol, we usually stick around here for an hour or so. So feel free to go to IGA, grab some alcohol, and have a chat to everyone there. That's it for me. That's it for this week. If you are sitting on a chair, please put it over there, and see you next time.
No.